Brian, kind of, piggybacking off that, I know that clients have kind of that short-term memory a little bit sometimes. And so we met last time in May. We're kind of giving year-to-date numbers, but a lot of people still remember that early August time period when we kind of had a little bit of a pullback or correction in the markets. Any thoughts on kind of what triggered that, or if it was just kind of a blip, or what we're looking at going forward for the rest of the year?
5 to 10% corrections happen almost every year, and the market tends to recover in about 3 months. So they're never fun when you're going through them. They tend to happen in most years. Now, they don't come out of nowhere. They're almost always the result of policy uncertainty. And typically, that uncertainty is in the United States. Usually, it's driven by the Federal Reserve, or perhaps something going on in the executive branch, but it's usually policy driven in the US. This time, it was more focused on the Bank of Japan. Now, I thought the Bank of Japan had telegraphed that they were going to raise rates a quarter point for the first time in decades. But clearly, some investors were caught off sides with regards to the so-called yen carry trade, borrowing money at nothing in Japanese yen and investing in speculative assets. So when the Bank of Japan raised rates and it was unclear how much further they may have to raise rates, there was some unwind of it. And Bank of Japan calmed it down very quickly, saying, we are not going to be raising rates beyond this, or certainly not significantly.
Yeah, that's been talked about quite a bit, the yen carry trade, and you kind of mentioned it. So basically, Japan's had zero interest rates forever. So borrowing in yen and then investing in other currencies to make money. And that's what, again, this is a jargon that's out there, and people don't always understand what's going on. So is there anything else to it besides that, or that's just basically it?
Yeah, you borrow money where you can get it cheap, and you invest it where you think you can get good returns. And so a lot of that was the AI trade or big tech stocks, and so there was nothing really fundamental about the U.S. economy that drove it. Some said maybe one bad employment report. That employment report didn't seem all that bad to me. Some said maybe the AI trade was just getting too long in the tooth. The reality was it was more technical than that. It was, investors perhaps getting margin calls from what was going on as interest rates went up in Japan, and you sell your winners to match that.